Bismillahirrahmanirrahim. What is up, guys? My name is Hassan, and welcome back, everyone. Today, I'm going to give you guys a stock analysis video on a company hardly anyone else is talking about, known as Danaos Corporation, ticker symbol DAC, which you guys can see right here. Currently, Danaos Corporation is at $70 a share, and if we look at it for the 1 year chart, it is up massive 265%. So if you look at it for the last 6 months, you can see that it's relatively flat. This is an amazing company that I think is due for a breakout any day, especially that it was consolidating or leveling off for the last 6 months, and it's due for a breakout any day. Before we start the analysis, I just want to show you guys my previous analysis that I've been doing on this channel, such as Broadcom, Waste Management, PetMed Express, Texas Instruments, Cisco, Skyworks Solution, Johnson & Johnson. Disregard the numbers because they have changed a little bit, but what I want you guys to get out of this analysis is that all the companies that I have previously made a stock analysis video on, almost all of them are up massively or up big, and all these companies are up and in the green. And I think that Danaos Corporation moving forward, it's going to do exceptionally well. Quickly to the chart, just so you guys can have a better view. This is on Seeking Alpha. This is a very unique tool you guys can use. So we can see here for the last 1 year, if we compare it, Danaos Corporation is up 265%, and then the last 3 years, it's up almost 500%. So they're up big. As I go through the company, you guys will be able to see how I do my fundamental analysis on the company. Currently, it's up around 265%, but normally I wouldn't invest in a company that is up this massively. But if you look at it for the last 6 months, it was able to consolidate, and I think this company is easily worth $100. And just keep in mind that make sure you guys check out the disclaimer in the description below, because I'm not a financial advisor. This is just for fun and entertainment. I just want to re-emphasize, even though it's up 265%, which might be a concern to some people, I still think they have a lot more room to grow in the coming or the near future. So let's take a look at the company. Under overview, the company offers seaborne transportation such as chartering vessels. So what they do is that they have these container ships and they lease it out or rent it out to other companies that then they use to transport goods. Here it says that they have around 65 container ships, but more recently I checked that they have about 69 container ships. I'm going to take you guys back to their investor presentation, and we're going to take a look at some of the different container ships that they have. That they have a diverse, high quality fleet, and you can see that they have 1, 2, 3, 4, 5, 6, 7, 8 different types of container ships. They carry goods from all over the world for such as Walmart, Target, Amazon. These are all retail items that we use on a daily basis. So none of these retail items are going away. Scroll down a little bit. One of the first things I like to look at is their market cap. Currently their market cap, or they're worth about $1.4 billion. And the reason why I like to look at this is because if I were to buy this company as a whole, I would have to pay $1.4 billion for this company. One of the best things about this company is that their PE ratio, their 12-month trailing PE is around 1.5. All right, 1%, 1.5%, which is extremely, extremely low. So in this industry, if you can get container ship industry PE of less than 5, I think it's a bargain. They have an amazing balance sheet, or at least it's growing. Another thing I want to point out is that percent held by investors is about 41% or 40%. Majority of the insiders still believe in the company, and that's why they did not sell out of it. If they believe in the company, they would have sold out of it long time ago. And this is a very positive. They have extremely low PE. The insider still believes in the company. This is relatively cheap. And if we go back to Seeking Alpha under summary, and let's quickly take a look at their revenue. If we scroll down, and we can see that annually continuing to grow massively. So they expect in 2022, which is in the near future, about 1 year from now, they expect $840 million in estimated revenue, 1.5 billion, but they're going to make that they're going to make more than half of it within 1 year, or at least in terms of revenue. Scroll down, their earnings per share looks even better. We can see that from 2020 to all the way to first quarter of 2022, their earnings per share have been increasing year after year. Not only have their earnings per share has been increasing, but they have been beating estimates quarter after quarter. We can see that in 2020 they were making around $1.91, and they expect a year later they made $5.32. So again, if we look at a little bit more of the earnings, the PE is still under 5. They expect to keep their price to earning under 5, which is a very positive sign. Their year over year growth is great. For 2021, 120%. 2022, they expect about 40%. And then 2023, they expect at least 12% of their earnings per share estimate growth. So now we're going to take you guys back to the financials. All right, let's take a look at their revenue. Even though you can see that their revenue was relatively flat for the last few years, this is a cyclical stock, but I think that it's going to increase massively, at least 5, 6, 700, or even as I said earlier, 800,000, 800 million in their revenue. As they increase their revenue, so does their gross profit. As a Muslim investor, we have to take a look at the interest expense. They do have some interest expense right here, but it is decreasing year after year for the most part. But we just want to quickly take you guys back to my notes. Quick check on Sharia compliant. So the business has to be halal. This is a container ship. For the most part, it does seem halal. We just have to check their interest expense. It should not exceed more than 5% of gross profit. So we're going to pull out our calculator. Currently, their interest expense is 66 million divided by 435. So we're going to do 66 divided by 435, and then we times this by 100 to get in percentage. It is around 15%, which makes it not Sharia compliance, which definitely makes me uncomfortable but right now, currently, it is not Sharia compliant because of the 5% rule. So hopefully they can bring this number down, paying less interest. I don't like when a company has to pay interest, especially when they're making massive money. So that is a concerning part right here. Their interest payment is a little bit too high for me, even though I like the company. For the last 12 months, their interest on long-term debt has been 0, which is a great sign. Hopefully they can continue to decrease as years go by. So some of the key points I did my research on, I was able to find out about Danaos Corporation. As we know, container ship rates have reached all-time high earlier this year, and Danaos was able to sign 3 to 5 year contract at these record levels. So I'm going to take you guys back to their investor presentation. We can see that this is their container ships, their charters, and their income or revenue that they will receive. You can see that majority of their charter is fully covered or fully rented out or leased out until 2022. Then we see some of 2023, and then even at 2024. For the next 3 to 5 years, they have locked in their good rates, and we should expect to see them continue to do well, even if there is a downturn in the coming years. As I showed in the presentation, the firm has secured $2.1 billion in revenue backlog, more than double the level they had last year. So I want to quickly give you guys a interpretation of this chart in my notes. As covered in the Danaos Corporation slides 7 and 8, which we just showed, the firm has secured a $2.1 billion in revenue backlog, which is more than double the level they had last year, all of which is significantly more profitable. All these rates that they were able to lock in for 2022, 23, 24, these are at a solid, good rate that they will continue to boost up their revenue and income. I did purchase a small amount of shares, and I will continue to, as the company gets better, continue to add to my shares. I easily see this company at $100 a share. Another recent activity that they declared, the last dividend they paid out was 50 cents. They're going to pay 50 cents per quarter, which is around 2-point-something% yield. Expect them to grow their dividend at a significant rate. So I'm going to quickly, before we end the analysis, make sure you guys like and subscribe the video. It helps the channel. I want to share out just some highlights from the Danaos Corporation. I just want to share out some highlights from their third quarter. So their net income was around $109 million. If you compare it to a year ago, it was around 47. So they have 47 million. So they have grown their income at a significant rate. Looking at their charter coverage, their leases have been covered 100% for the remainder of 2021, 90% for 2022. which is amazing. And as time goes on, as these container ships charging a higher price, which will bring more money to the shareholders. And they also have declared a 50 cents per share for the third quarter, which is payable December 2nd. So if you guys are a holder of it, you guys will be payable on December 2nd. I actually got my 50 cents per share as a shareholder. Only issue that I see with this company is that their debt is a little bit high, which their debt then leads to interest. And that's the only concern I have. Besides that, I think it's a very well run company that is going to keep doing well for the months and years to come. As always, guys, thank you. We're going to see you guys next time. Bye, everyone.